Good day, everyone. Welcome. Welcome to today's live trading session. Welcome to today's live trading session. We'll share my screen shortly. We'll share shortly. Okay. By now, you should be able to see my screen. So we have non-farm on top now, non-farm payroll for the dollar. Non-farm payroll. So you guys should see this is in 11 minutes. It says the non-farm payroll for August. The consensus is 170K and the previous is 187K. Let's read the digits. A higher than expected figure should be seen as positive for the dollar, while a lower than expected figure should be seen as negative for the dollar. So we need a higher than expected figure. Currently, this figure is lower than this, which is making the dollar weak, which made the euro to go up and the AUD to go up. But when this information turns out to be positive for the dollar, then we can then see what a down push for the dollar. So let's watch out. Let's watch out for the non-farm payroll reports. Let's watch out for the non-farm payroll reports. Currently, the market is going to the upside. Let's check out the DXY, the structure of the DXY. So based on the structure of the DXY, there was a massive rally yesterday and it went above the 103.500 psychological level. If you look closely, you see that this market has moved from a massive support area and is in between currently. So if the data turns out to be positive for the non-farm payroll, which is higher than expected, we should expect the dollar to move up into this what calls this other block over here. So that's what I expect for DXY. I hope you guys are understanding. Okay, so that's what I expect for DXY. That's what I really expect for the DXY. We expect market to move up from this area. But if the market doesn't move up, if the data turns out to be negative, we expect the market to move down for the DXY. So from structural level, this is more like import correction. And that import up to a psychological level, and also there's a resistance level there. So this is what I see for the DXY though. That's why I called out the AUD USD trade for itself. And if you look at it, I'm going to be checking out the AUD USD trade shortly. But let's see the structure of the DXY first. Okay, so for the structure of the DXY, the DXY is just coming from a point of resistance and dropped massively. And this is the new, we have a cause over here. This market is acting like a cause blocking, which is this. Okay, so this is the cause. This market needs to fulfill efficiency and continue dropping. Already the market has come into here, fulfilled efficiency and moved up massively. Yes, moved up massively. So from here, this would be a five-way structure. It would be a five-way structure. But let's see how the market plays out. No, the market is reactive, not predictive. So let me check out AUD. These are AUD trade core early this morning. Now it's currently still inside our order block. It has not made any other. It's still inside the order block. Although it broke structure. Me, don't try yesterday for AUD. Over here, the market just kept ranging, kept ranging. Over here, it broke. It broke this low, broke this low, broke this low, broke this low, broke this low. So it took out all the liquidity over here. So from here now, when it comes back to origin, which the market did, it came back into origin, which is a massive box over here, order this order block. From here now, we expect the market to continue falling because it has already given us a sign of strength where the market wants to go to. This is our sign of strength we see. SOS. This is the sign of strength we wanted to see. So the market already gave us a direction of where it wants to go to. But I think there's a lot of panic in the United States dollar because of the whole risk information and the whole country that I just mentioned that they won't be carrying out trade with the dollar anymore. So all that panic, let's see how the market reacts towards the non-farm period. And if you see non-farm period has to do with those a monthly employment report. A monthly employment report produced on the first Friday of every month. Non-farm payrolls have a significant impact on the value of the US dollar, the bond market, and the stock market. As per the Bureau of Labor Statistics, the current employment statistics program conducts surveys on approximately 141,000 businesses and government agencies, which represent approximately 486,000 individual work sites, in order to provide detailed industry data on employment hours and earning of workers. So we need to see that an employment is just exactly as previous. The forecast is exactly as previous, which if this employment rate is lower than forecast, it is good for the dollar. If it is higher than forecast, it is bad for the dollar. Then the non-farm payroll private sector, we need this figure. This figure is lower than this figure, which is making the dollar to be weak. But if this figure turns out to be higher than expected, it's going to make the dollar to be strong. The dollar could drop down. Then U6 unemployment rate. U6, this is higher. So this is making dollar to be weak. One, two, three is making dollar to be weak. Why this is neutral? If we see a positive data that is higher than 170k, a positive data that is higher than 150k, and a percentage that is lower than 68, that is good for the dollar. So that's what we're expecting. And let us see other dollar pairs. Let's see what the market is doing with other dollar pairs like gold. Gold already got to this level. Yeah, I was expecting market to come to this level. So it is currently inside an order block. Good. And the news will be dropped in about 6 minutes. So I think we can take a sell for gold. Gold is currently inside the order block. We can take a sell for gold. So we can give it about 50 pips, 50 pips stop loss for gold, and 150 pips take profit. One, three, two, 400. So we have about 2 minutes to go. Apply proper risk management, guys. The risking one is to 3. So we have 130 pips for gold divided by 3. So we're risking 43 pips. While we're entering trades, we're going to currently inside an order block, 43 pips. So it's going to be 1 is to 3. Okay. Apply proper risk management, guys. Apply proper risk management. We have just a minute to go. A minute to go. That's 3 pips. I'm going for 130 pips. That's 3. I'm going for 130 pips. Good sell. Apply proper risk management. There's 3 seconds to go. If you have any questions, kindly drop it below in the comment section. Any pair you want us to analyze. Is lower than forecast. Unemployment rate is non-farm payroll is higher than forecast. So I'm meant to see the dollar pushing to the downside. Oh man, the dollar is going to the it's gold is going to the upside. Let's see what AED is doing. Wow. And the market is going to the upside, although the dollar is strong. You can see the unemployment rate is lower than forecast, then the non-farm payroll is higher. The non-farm payroll is higher, but it just kept going up. It just kept going up. Well, better luck next time. Better luck next time, I guess. So, any questions before I round up? Drop your questions on the comment section. Drop your questions on the comment section. There's a panic in the United States dollar. That's why, although we have a lot of buys, the market is still pushing to the upside. Any question before we round off? Any questions?